The debt deal is done. Let's analyze how the markets are likely to absorb this. Pankaj Pandey as well from ICICIDirect.com joins us on the show. Pankaj, big global news this morning. How do you think India is likely to take it, considering we've been hitting that ceiling of 6,100 time and again?
Well, definitely this news is quite positive, but having said that, I think Indian market performances on a relative basis has been better. So in this sense, this news would have impacted a lot of markets and not specific to India. So in that sense, we would not see a specific outperformance by India from that context. But overall, yes, it is a big relief because I think there's a big anxiety towards what will happen in case if this didn't had gone through. So in that sense, it is a positive for the markets short term. But our sense is that probably going forward, again, earnings will sort of anchor the market direction.
What is your take on IT? Companies have delivered, but stocks also have appreciated in the run-up to the numbers. Is all the good news in the price, or based on the commentary, these stocks could go much more higher?
See, if you look at it, is one of the sectors which has been growing quite well. So, given a market where growth is actually quite not there. So, in that sense, this is one sector which is delivering on the growth side. Having said that, if you look at in this particular quarter, the growth is quite broad-based. So not only tier 1C, in fact, the tier 2s have also shown good set of numbers. The Mindtree numbers, in fact, the expectation from persistent or other mid-cap tier 2 companies is also quite good. And they have been delivering. So in that sense, we believe that the entire sector is witnessing good growth. And I think in a condition like this, even though the stock, all of them are lifetime highs, we expect them to deliver on the side of earnings. So broadly, we are expecting that the tier 1s would deliver 15 to 16% kind of earning growth, excluding the currency, and probably a similar set of numbers by the mid-cap players. And accordingly, we would expect that the stock prices also would reflect the same movement. So we are positive on the entire IT sector, because I think over the last 4 or 5 years, we haven't seen multiple expanding in the case of IT as a pack. So we would expect that the stocks would deliver 15 to 16% from current levels for most of the players.
What happens if rupee reverses? The big tailwind which supported IT companies for the quarter gone by could become a headwind. Right now, rupee is not at 69; it is 62. So maybe little bit of compression could happen this quarter.
You're right, but I think excluding currency also, if you look at, we are expecting that the companies could deliver 15 to 16% kind of a growth. Given that, if you look at within segments also, the growth is quite broad-based, and the commentary from most of the players is quite positive. So even with excluding that, I think the numbers would still be far better than the overall market. So which is where we believe that even though the stocks might appear expensive, given that we have seen the entire IT index up by about 50-odd%. But I think that has been the case for some of the companies which have been growing consistently. So if IT displays consistent growth, I think it will continue to sort of be there in the prices, at least if not multiple expansion, the performance would be in line with the earnings growth. So 15-16%, which is the top end sort of guidance for the NASSCOM, I think that is what the kind of growth rates both tier 1s and some of the tier 2s could deliver, and which is why I think one should not really be scared at current levels, even for most of the IT stocks.
Based on Q2 numbers, is Bajaj Auto a buy?
Earlier, Nikunj, we had a buy on Bajaj Auto with a target price of about 2,200. We'll have to exactly look into earnings in details, and probably then we can take a call whether to increase the target prices or maintain it. But having said that, the company has been doing phenomenally well, especially on the export front, since it derives about 40% of its earning from export. So it was a beneficiary of the rupee. And I think going forward also, we would expect this company to benefit from the export front. Domestically, though, we are not expecting that kind of a bigger growth. But having said that, for the past 4 or 5 years, this is one of the best performing stocks in the Nifty, and with multiples of about 14.5 times, I think auto as an entire pack makes a good case for buying at current levels. On the expectation that we'll see some pickup in the discretionary spending once the economic sentiment revives over the next 2 or 3 years.
Pankaj, what's the call then on the banking pack, and especially the kind of volatility that we've seen of late? You saw a great move coming in on Monday, and then again saw profit taking an immense amount of that coming in on Tuesday, almost reversing all the gains that we saw in Monday's session. What's the sense that you're getting? Any outperformance pockets that we could see in the banking sector?
I think if you look at the bigger problems for the banking sector still remains, which is the asset quality. So asset quality concerns for PSU banks will remain at elevated levels. I think from last quarter, a number of banks had posted good amount of treasury gains, but with the yields rising 176 pips in this particular quarter, in fact, the trading gains would also be not there, and in case if it would be there, it will be marginal. So that will also not help. In addition to that, I think there's some bit of a stress being witnessed in the private sector banks as well, especially some of the segments. And I think going forward, the provisioning also might sort of increase for a number of banks. So having said that, we are expecting overall profit growth of about less than 1% for the entire banking pack, with PSU banks declining about 11 odd percent, and private sector banks gaining about 20%. But having said that, I think the growth is sort of evaporating, and which is why we would not expect this sector to outperform. But having said that, in case if we see a good crack in this particular sector, I think one should look at or one can attempt bottom fishing in this sector. But as of now, I think the time is not yet right.
Pankaj, appreciate the time and thank you for joining us.